Ladies and gentlemen, thank you for being with us here in the room in Brussels. Thank you for being connected. I say hello to all people connected online. And you know that today conferences have more people connected than in person in the room. So we are happy to be able to do that at distance and to offer simultaneous translation in German, English, and French all over Europe. So thank you all to being with us today for this conference. As the president of the European Tax Advisor Federation, ETAF, it's a great honor for me to welcome you to this conference with the topic Professional Regulation, a cornerstone for curbing down abusive tax avoidance. The topic is on the table today, and we are happy to contribute to the reflection and to the thoughts of such an important topic. It's a very topical subject, as with the Pandora Papers, after several previous other scandals, the regulation of tax intermediaries is back in the spotlight. The European Commission has announced its intention to regulate tax advice. However, it's not right to say that there are no rules at all today. In 2016, I remember you that the Anti-Tax Avoidance Directive, ATAD, has brought a general anti-abuse rule. And in 2018, the EU also introduced with its directive on reportable cross-border tax arrangement, namely DAC 6, a disclosure obligation for reportable cross-border tax arrangements by using a set of hallmarks. Yet the Commission seems to consider all these measures are not sufficient to tackle abusive tax avoidance and now wants to begin earlier in time when it comes to the development of an abusive arrangement scheme. For this purpose, the Commission is examining the introduction of a set of criteria that providers of tax advice will have to apply to determine what constitutes acceptable tax planning or face penalties in case of non-compliance. At the European Federation of Regulated Tax Advisors, ETAF recognized that the dubious abusive tax avoidance arrangements jeopardize the state's revenues and are unfair to the vast majority of European taxpayers who fully comply with tax laws. We, of course, recognize the need for action. The excesses of the Pandora Papers constitute for us a worldwide misbehavior of persons and organizations of the consulting sector without respect for compliance or responsibility to society. ETAF and its members explicitly condemned such a misbehavior. But we shouldn't put all tax advisors in the same basket. In the member states where the profession is regulated, tax advisors are already obliged by law to practice their profession in full accordance with all applicable laws and regulations, what is guaranteed by a personal responsibility. I remind that the counterpart of this commitment to public interest is a reserved activity, what is not the case in every member state, but what should be. With this compliance function, tax advisors also have clarification duties towards their clients, which means that they not only have to explain the current tax laws, but also to demonstrate to the clients which taxes they will not be able to avoid and why. This intermediary position should not be neglected when it comes to the overall objective of the European Commission to curb down abusive tax avoidance. In this function, tax advisors help the economy to pay their fair shares of taxes and disburden the states through their function of consultation and information. The problem is nothing new. For ETAF, the main responsibility is the lack of harmonization of tax advising within the European Union. Professional regulation, if existing at all, differ widely from one member state to another one. The spectrum ranges from full liberalization in some member states, like in Netherlands or in Spain, to a distinguished level of regulation in other member states, such as Germany, France, Belgium, and Austria, and many other ones. The details of the plan of the Commission are not yet known, but it was already publicly said that it does not intend to regulate the tax profession. And you won't be surprised to hear that it is precisely our battle horse. ETAF is convinced that a strict regulation of tax professionals in the EU can make a significant and valuable contribution to the stability of our tax systems. In this spirit, all ETAF members signed our Charter of Regulated European Tax Advisors, which represents a common framework for tax professionals. High level of qualification, continuous mandatory professional training, mandatory membership to a professional organization with sanctioning competencies and guarantees for an independent practice of the profession throughout the EU would lead to a high quality of tax advisor services and thus contribute to the fight against tax avoidance. We believe that every EU member state should be encouraged to introduce or strengthen national binding professional law frameworks and to enhance their national anti-abuse rules on tax advisors as an additional regulatory framework enforceable by sanctions. We can be curious to hear from the decision makers today about this plan, because when determining what is acceptable and what is not, legal certainty will be key. It requires clear boundaries to be drawn between legality on the one hand and illegality on the other hand. Under the rule of law, terms such as dubious, harmful, abusive, or undesired are basically unsuitable to draw such a clear demarcation. Situated somewhere in between legality and illegality, they would widely open the door for arbitrariness of the state when it comes to tax models. The rule of law principle is especially important in tax matters, and legal certainty is crucial for tax advisors and taxpayers. Consequently, it is highly important for us to pass on the responsibility for deficiencies or loopholes in the legislation to those who are subject to the law. So coming to our conference today, ladies and gentlemen, finding a solution won't be easy. Ranging between the considerations about the legal certainty and the rule of law on the one hand and the need for action on the other hand. Like most of the Brussels stakeholders that I can see seated here in the room today, ETAF is looking forward to participate to this complex debate. With this conference today, we want to launch a first public reflection on this new project, discuss which solution do we have to better fight abusive tax avoidance and the possibilities the professional regulation has to offer. To address all these questions, we are delighted to have with us a great panel of high-level speakers. Let me welcome first Benjamin Angel from the DG Tax Sud of the European Commission, who will update us on the intentions of the Commission. We know Benjamin already participated to our last conference. Thank you, Benjamin, for being with us again. We appreciated much your presence today. We welcome as well the MEP Markus Ferber with us today, and we would love to hear from him what the European Parliament has on its agenda, if you wish. We are also happy to have on the podium Sarah Godder. Thank you, Sarah, researcher at the EU Tax Observatory, who will tell us about her research on tax avoidance. Last but not least, Philippe van Klooster former tax partner at PwC and board member of the Belgium Institute for Tax Advisors and Accountants, will represent the regulated tax profession's point of view in today's debate. And I now leave the floor to our moderator, Todd Buell. Thank you, Todd, for being with us today. He is the tax journalist for the Media Law 360, and I'm looking forward for a great debate thanks to you. Todd, the floor is yours.
Thank you very much, Philippe. And I'm also looking forward to a great debate. And a little bit later on, I'll open the floor to questions. So keep them in mind as we go along. But first, I'm going to turn to Benjamin Angel from the European Commission. There's a lot of interest in what the Commission is going to do with respect to regulating tax advice or tax advisors, especially in light of the Pandora Papers and, as was mentioned in the introduction, some of the other scandals that had come before that. So, Benjamin, if you would, can you give us some sort of insight into what the Commission has planned, or what it is that the Commission is looking at?
Good afternoon. It's a pleasure to be with you today. Let me go first a step backward. It is true that we have today many pieces of legislation in this field. We have the various ATAD directive, and the DAC 6 has also created obligation to communicate tax arrangement. Nevertheless, it is our conclusion that the existing framework is not sufficient. First, the DAC 6 is a relatively complex animal, and it is unclear at this stage whether member states are in a position to really work as effectively as they should on the information they get. Second, the practice shows that the intermediary in DAC 6 can end up pushing very much the information obligation on the client. And third, we faced last year, as you remember, the Pandora paper. And the Pandora papers showed very clearly that the existing framework is still not working as it should. We tried to address it via two angles. First, a domestic angle, and second, an external angle. The domestic angle was the proposal on shell companies, since shell were once more highlighted as an issue from a tax point of view, and the legislative process is relatively well advanced now, so we are confident that an agreement is within reach under Czech presidency. But there is also an important external dimension to it. Because one thing is clear, via Pandora, we have seen plenty of arrangements which were used sometime by high net worth individual or companies in third country, which very often were not known to the authorities. We have requirements that apply to third countries via the Code of Conduct. But those requirements, for the time being, are rather legalistic in their approach. That is, we ask them, for instance, to introduce substance requirement and stuff like this. But our capacity to check the effective implementation is very limited, for obvious reasons. So we came to the conclusion that if we want to address effectively the problem that we face in third country, we need to go at the root. Each time there is use of creative structure in a tax haven, the taxpayer usually is not the one who created it. The taxpayer either purchased something which is off the shelf from an advisor or got the advice tailor-made to create it. So if we want to effectively make it more difficult to use this kind of structure, we need to come with a set of rules related to enablers. We are not the only one. We reached such a conclusion. You know that the United States are also discussing at the moment legislation on enablers with obligation to document the due diligence and stuff like this. It's a rather widespread conclusion. I heard the president of ETAF saying, why don't we regulate the whole profession? That's clearly a possible option on paper, but in practice, the variety of situation is very significant in the European Union, as you know. We have countries with a very clear regulated tax advisor profession, and we have countries where there is a multiplicity of people that can provide tax advice. It can be lawyers, it can be bankers, it can be chartered accountant. So what we're trying to design is a set of rules fit for all weather that applies to all the people providing tax advice for creating structures in third countries, whatever the sector in which they operate. I cannot enter too much into the detail, and I'm sorry I will disappoint many of you today, because we are still on the blackboard, and we will consult, obviously, including publicly, and by definition, the consultation will also influence the final proposal.
Could I ask a short follow-up on that, Benjamin, if I may? I know there's interest in the public consultation, and it was announced, I think, in April that the consultation would begin in May, and to at least my knowledge, it has not started yet. So I was wondering if you could perhaps give the audience some guidance when this consultation will begin.
This I can. So this consultation should start probably at the beginning of July. It will be a normal consultation. We are still trying our best to have a proposal on the table still this year. Let's see if we manage, because by definition we need to prepare it carefully, and we need also to have a robust impact assessment. But the target is very clear, and I think it's important to have a proposal that covers the profession in an effective way, in a dissuasive way also for those which are tempted to look for advice with aim of doing some tax evasion. But we also want to cover aggressive tax planning. That is very clear, because covering only tax evasion would not be a novelty as such. By definition, in the 27 member states, tax evasion is a crime. So anyone providing advice for facilitating tax evasion is already sanctionable under the law. If we want to go one step further, and this is where the difficulty lies, because indeed it needs to be defined accurately and with enough certainty, we need also to have a set of rules which allow to prohibit aggressive tax practices, which, without being tax evasion, are clearly circumventing the law.
And I think that it opens the door to one of the questions, like what is aggressive tax planning and how that can be defined. And I see at the end here of the stage some smiles coming up. So I don't know, Marcos or Philip, if you... No, if you don't, oh, okay. Well, anyone who wants to jump in, how do we define that? Go ahead.
Well, I can't define it. I can give some comments on it, but I'm not in a position to really give a definition of abusive tax advice of tax structures, because even the Commission is not really able to do it.
We will.
Well, but at least was said in the proposal of DAC 6, that it's so complex and so difficult that they have made a total different system, which is even more complex. I was happy to hear that the Commission is aware how complex it is. But when I hear, well, okay, it's something which evolves also, abusive tax avoidance. Because if you look also in the past, everything was much more simple. And historically, I agree that a lot of taxpayers can perhaps or need certain assistance of intermediaries for certain structures. Many structures in the past were made on demand of member states, yeah, to attract companies to their countries and so on. And okay, that went a certain way, which probably was exaggerated and so on. So there was really a need that the Commission and the European Union had some new legislation at that and so on. But I also have the impression that, and I don't know if it's sometimes on purpose, that there is tax evasion is mentioned the same as tax abuse, which I think really should be split, because for the certainty also of the taxpayers and the whole community in Europe, I think it's important to know, do I something legal or illegal? And with all the rules, sometimes it's not clear anymore about what we are talking, especially with translations, different languages in Europe. You get, well, nobody knows about what is talked.
Sarah, I know you wanted to say something on this?
Yeah, I mean, I'm looking at it from an economic perspective, which might seem an easier job to you, maybe. But I would say that, I don't actually need to distinguish between illegal and legal tax avoidance, because what we see is that multinational enterprises or other taxpayers, if they structure their organizational, or they organize their organizational structure or their accounting in a way that profits occur where tax incentives are, and not in a way that increases the efficiency of their production or of their provision of services, right? So we see that they organize their economic activity depending on tax incentives and not depending on how to increase efficiency, economic efficiency. Yeah, so this is how we would say. Then we have tax avoidance, and statistically we can measure it, or we measure it when we see that profits occur in places where no real economic activity takes place. Yeah, where we have no employees or only 5 employees, where we don't have tangible assets, where we don't have relevant sales, but we have just a patent or the right to use the software located in a certain jurisdiction. And this jurisdiction magically attracts all the profits of this company. So then we can say this is definitely tax avoidance. And we think it's problematic, or it might be problematic for the government. Yeah.
I want to stress that the notion of tax avoidance is not entirely new in union law. Actually, in a limited set of texts, it is already there. The financial regulation, for instance, which applies to all financial operations of the European Union, prohibits the financial intermediary of the union budget to use guarantee from the budget of the European Union to support operation that would lead to tax evasion or tax avoidance. And that is an obligation which in practice is already implemented for a number of years, for instance, by the European Investment Bank, by the European Investment Fund. And they are looking on a case-by-case basis each time they see a project, whether the structure of the project as is there for a solid business reason or only tax reason. And we have a step-by-step method, which has been already communicated in a communication by the Commission a few years ago. The same approach has been retained during the COVID crisis in 2020, when the Commission recommended to member states not to provide state aid to companies for a project that would lead to, again, tax evasion or tax avoidance. And again, we communicated to member states a step-by-step approach on what is it that they should do to be able to reach a conclusion. So I'm not saying that it is easy, and I understand the difficulty for the tax profession, whose very nature is to try to optimize somehow the taxation of their client. But there is a clear difference in our view between seeking an optimal implementation of the existing legislation and seeking all possible ways to circumvent it and creating structures in many different and sometimes exotic places to this effect.
I'd like to bring...
Let me just stress again that
Commission is
the
always-
directive which is being prepared is related to structures being created in third countries. We are not talking here of the activity within the European Union. We're talking here of structures which are in, I don't know, British Virgin Island, Cayman, and any other exotic place you can think of, which are scarcely there for reason others than taxation, I must say.
That's something we may come back to a little bit later, but I would like to bring Markus in here. We've had discussions of tax avoidance and intermediaries and making this and looking at areas where this tax system as it is now may not necessarily be fair. What do you think can be done to regulate or put a focus on intermediaries to help make the system more fair?
Yeah, firstly, we have to think where the problem really lies. And honestly, I think before we look outside the European Union, we should try to keep inside European Union our issues clean. And honestly, that is not yet done. So therefore, a lot of things have to be done as we are a single market. And the single market creates a lot of possibilities for companies, and I don't blame multinationals or international companies for being multinationals or internationals. Sorry, with the single market, we want to have these kind of companies. And we always have to find the right borderline where it is a good behavior, a normal behavior, and it becomes a behavior which is misusing possibilities. And that brings us back to the good old chicken and egg question. As long as I have a single market and national tax competence, I will have these problems. And therefore we have to find proper answers. I was rapporteur for a report in the FISC subcommittee, only to introduce some tables, some information tools provided by the European Commission to create a kind of transparency that we are able to identify where the real problems occurs. And if you look what happened with the state aid approach, yeah, whether it's a forbidden state aid, the famous Apple case, or Ireland case, sorry, it was a case against Ireland, not against Apple, had no chance at the end of the Court of Justice. So we learned state aid rules are not the valid instrument to address this problem. And we still have some tax havens inside the European Union. I'm a great fan of Madeira, and I like this wonderful great house in the center of the city with a lot of companies located there, employing only a handful of people, with the official grant by the European Commission when Portugal entered the European Union, and that is valid till today. And I'm very happy that famous football players use these possibilities to safeguard their picture rights, to mention one company which is located there. Sorry for being so open-minded, but if that is the case, and you can even find in the internet a promotion approved by the European Commission, here is a tax haven, so we shouldn't start to look around the world as long as we have not addressed the problems inside the European Union. And that is what we have to start. And then we come to the next question: are the tax advisors a problem or a part of the solution? And honestly, you can't make the tax advisors to the problem, because they have not invented the tax system. They have to deliver a service as advisors. They give advice. The tax responsibility is not in the hand of the tax advisor. It is in the hand of the company or the individual person who has to pay taxes. The tax advisor gives advice. That's his name. That's his profession. That's what he has learned, or it has learned, to be neutral. And it's up to me as a client or as a company whether I follow this advice or not, to be very clear. And I sign at the end, and not the tax advisor signs. And therefore, we have to address these issues more clearly inside the European Union, inside the single market, to overcome these problems. If Belgium, for example, to be very clear, makes a legislation in the Belgian tax law to attract investments in research and development, and it can be misused to reduce the tax burden without being very active in research and development, and you found a branch which you call an entity which you call research and development, and you put it under Belgian law, and you enjoy all these benefits. It's not a problem of the tax advisors. It's a problem of the legislator who introduced this kind of legislation. And therefore, I think what the Commission and we as Parliament together should really more enforce ourselves is to identify all these problematic developments. OECD has delivered a lot of things, but OECD is something else than the single market of the European Union, and therefore we have to address more issues. And if we achieve that, then I think we have the right to say, oversee in these wonderful areas, there are additional problems. But firstly, I think we should solve and address the problems we have inside European Union.
I would like to give Benjamin okay. Marcus, you seem to have struck a chord with some members of the audience there. So
it comes from my constituency. Constituent.
I would like to give Benjamin. Do you want to respond to that?
Sure. First, I don't disagree with Marcus. Obviously, that the primary thing that we need to do is to fix the law and to have a very clear set of legal requirements that is to be respected by those whose profession is to provide tax advice. In that sense, there is a major challenge to make sure that the law is clear. Where I would disagree with him is that we should not underplay also the role that can be created by a tax advisor, be they in the European Union or outside. Honestly, you can go 5 minutes on Google and you will find plenty of companies which offer you ready-made structure in Cayman, in BVI, in any tax haven you can think of, even with a board already appointed. It's not even expensive. In a few minutes, we need to be able to also address this situation. We need to be able to have a proper level playing field, which ensure that those who behave, those which are regulated, do not suffer from the mispractices of the others. And this is very much also what we will try to do. Our set of rules will try to address the enablers wherever they are, even if they are outside of the European Union. Remember many years ago when we had the Panama paper, Mossack Fonseca was all over the place. That's the kind of behavior that we need to address. And let me give you just one anecdotal element. You know that today the Spanish tax administration is prosecuting the Colombian singer Shakira for tax evasion. Do you think that Shakira had the personal tax knowledge to create complex structures in tax haven? I don't think so.
Well, on that note, Philippe, I want to ask you about, as a voice maybe for tax advisors, the tax advice community, is what's being said here, is some of this, in your view, a little bit unfair, or is it correct? I mean, what is the role of the tax advisor here?
Well, there has been a lot that has been said, and first of all, on the role of the tax advisors, this has evolved, at least in Europe, yeah? And sometimes this is forgotten. The role of the tax advisor is nowadays not only find the best solution to avoid taxes and pay minimum taxes. The role of the tax advisors is giving good tax advice, quality tax advice. This means giving different solutions, yeah, with also, is there economic substance? This is part of the advice. The times there that to have a look if there was substance somewhere and a misuse of holdings and so on, this is gone. A good quality advice from those who are educated and so on, they give those elements also in the tax advice. So sometimes it's forgotten that the role of the tax advisor evolved, at least in Europe. And okay, I hear that sometimes on the internet you can find perhaps out of Europe some structures, but if then like with DAX 6, a local European tax advisor is immediately responsible if something comes in where he was not as such involved, but the taxpayer has had his advice and not always, or the local European advisor was not conscious of all the elements, gets also the same responsibility. That is not fair, I think. Yeah? And that element is not always clear. That it's too much a big canon for sometimes small elements, and that's why sometimes there is more administration today for tax advisors than they can give quality advice. And there a balance should be found. Because if, again, there are new legislation coming in, I always wonder, is something going to be taken back? Because it's more. Sometimes perhaps old legislation is not needed anymore, and you can take some away from the past.
And I'm wondering if I could ask a follow-up there, if you could talk a little bit about the challenges in regulating the advice sector, the advisor role in different member states, and how, the challenge that the Commission is facing here to do that.
This is a big challenge because the tax activity, and because we're talking about tax activity, is totally organized differently in Europe. You have the countries of the members of ETAF, we are quite regulated, but you have other countries we are totally not regulated. I think every country has its own country-specific history, which should be respected. I can only talk about the countries I know a little. For me, tax advice should be quality. Quality in technical, but also the right questions, economically, and making the taxpayer think. For me, for Belgium, for example, you need a kind of, we have an institution where, as taxpayer, your tax title is recognized for the taxpayer, that he has a certain guarantee that this advisor has the quality, the deontology, and so on. So for me, a certain regulation for giving quality of tax advices is necessary for the certainty of the taxpayer.
Sarah, I'd like to come back to you. I mean, given we've been talking about here, and these terms like transparency and seeing the rules of different member states and mentioning the various scandals. I mean, do you think that this is moving in the right direction to stop tax evasion, avoidance based on your studies, and what more could even be done above and beyond this?
Well, in our last report, we highlight actually that many member states adopt preferential regimes for high-income earners and multinational enterprises, and that it doesn't seem to stop. So we have an upward trend in all sorts of regimes, from which, those highly mobile taxpayers can benefit more than others, I would say. And I think this points to the problem of regulation in the EU and harmonization, tax harmonization, because as the more differentiated the tax systems are and the more different regimes we have, of course there will be more avoidance opportunities. So I agree in a certain sense that the lawmaker should make sure that there are at least as little loopholes and avoidance opportunities as possible. But I would also hope that, for example, the tax advisor profession contributes to making the laws better. And sometimes, I think in the lawmaking process we face a big army of lobbyists that are very quick introducing loopholes in those tax laws. And I wonder, to what extent maybe the tax advisor profession can have a beneficial impact on reducing loopholes, on pushing for simple solutions, for reforms, like, for example, a global minimum tax that would solve some of the problems. Where are the profits? Where are the profits actually made? We don't need to ask this anymore if we just say there's a minimum tax that MMEs have to pay. I don't know if. What is your opinion?
Well, I can only more speak again for Belgium. We as tax advisors certainly help to get good legislation, but if you give it in the hands of politicians, and after they have been 1 or 2 nights together, you get a total different legislation where loopholes are in.
So, Marcus,
we are the bad boys.
It's politicians' fault.
Yeah, thanks God we don't do tax legislation. We only give advice to the council, which decides at the end unanimously. But honestly, yes, of course, political processes, especially when you have coalitions with a lot of parties, like in Germany now or in Belgium, You always have to make political compromises, which at the end are not creating the best way of a tax legislation. But on the other hand, yeah, that's why you can't blame the tax advisors for that. If the law is bad, the tax advisor cannot solve all the problems occurring out of that. But even there, I thought, maybe I was blunt when I was young here in the parliament, that a fair tax competition creates better and better systems at the end of the day, but the opposite did happen. We had an unfair tax competition inside the European Union, and that is really a problem what we have to address, because if you make your tax system so attractive that things which would never happen in your member state do happen in your member state, then you do it that your neighbors pay for it by less tax revenues. And that is something I think we should firstly address. And I have a lot of examples. I will stop, as I said already, 2 of them. As long as you can organize a lot of things inside European Union, we should not be so negative about what's happening in the rest of the world. OECD addresses a lot of issues, and I'm very happy that Europe and the finance ministers adopted that very, very quickly. But if we come to the actual issue, it's the Commission who has not yet proposed the first pillar of the OECD proposal, which of course is a more problematic one.
The discussion is still ongoing, so it's
it's still ongoing, but it was very easy to do the second pillar, and even during 1 week we got the proposal from the Commission, knowing that the problem is of course in the first one, which brings one member state to the position to stay. I stop the second one as long as I have not yet the proposal for the first one. I'm not blaming anyone, but I'm only describing what we are doing at the moment on a European level. Speaking about improving the quality of legislation would mean in that sense that if we decide to do it in a European common way, which is not obligatory, OECD can be done by 27 member states individually as well, but it makes sense in a single market, then we should get both proposals together and discuss it and decide it together, because the more problems occur with the first pillar, even inside the European Union, than in the second one with the minimum rate. So therefore, that has to be taken into account as well if we want to be the leading area in good taxation legislation in the world.
I would like to, what you mentioned, Marcus, is really fascinating, and I think we all could talk for hours about this, but I want to bring it back to the question on the table about the advice of the regulation, and one way of linking that, I think, is you mentioned the problem of, or at least implicitly, the problem of unanimity in the Council vis-a-vis Pillar 1 and Pillar 2. Benjamin Angel, I want to ask you, with respect to what you will, or what the Commission will propose on regulating the profession or regulating tax advice, is that going to be, you know, in the point of view of the Commission, will that, or of the treaties, will that be a tax item, or would the Commission consider using Article 116 or some other legal basis? I mean, can you comment on what the legal basis might be? Thank you.
First one remark, because I cannot let it unanswered. The Commission has proposed a directive for Pillar 2 3 days after the model rules were agreed in the OECD. I don't know when model rules will be agreed for Pillar 1. The discussion is still ongoing with 137 countries. I admire your trust in the Commission, but we cannot entirely substitute 137 countries.
Yeah, but you have the monopoly, sorry. If you have the monopoly of initiating legislation, don't blame now the member states for that.
No, but here we are about
here
it's about to transpose an international agreement which has not been reached yet. It is still under discussion on key parameters like double taxation, for instance, which is where do we take the money from, like tax certainty. The work on the OECD Pillar 1 has taken delay. It was supposed to be finished for June and July. Now the meeting of the inclusive framework has been postponed again, probably to October, and we don't know when the convention will be ready. But rest assured, and I want to reassure Parliament, that the Commission will table a proposal for Pillar 1 the minute we have an international agreement. but not before, because by definition we cannot deviate. Now, coming back to your question, Todd, for sure it won't be 116. That is 100% certain, because you cannot do general legislation based on Article 116 of the treaties. This is not allowed. Article 116 is an article which allows to go straight to the ordinary legislative procedure to help ending measures in member states which are distorting the single market. So you need to identify those measures. You need to write first to this member state, a bit like an infringement procedure, to tell the member state we have seen this problem, it creates a distortion, please commit to take it away. And if they don't, then you have a directive which is addressed to those member states. Article 116 cannot be used to circumvent the unanimity requirement which exists. Unfortunately, taxation is a bit the poor parent in the treaty. I think it's fair to say. There is a dedicated legal base for indirect taxation, Article 113. There is no dedicated legal base for direct taxation. So all the texts which have been adopted so far have been adopted based on a single market legal base, which is Article 115, requiring unanimity. It's very difficult, it's very cumbersome, it's very outdated. We would certainly prefer the ordinary legislative procedure with Parliament and Council having an equal role and a qualified majority for the Council, but it is what it is. And the treaty is as such, and there is no shortcut to bypass the treaty. Now, on the specific of today, we will see. There are several options.
I have a question, because you said for Pillar 1 we have to wait for the OECD. Taking that for the regulation of the profession or the activity, and you're talking about third countries, why don't we have also a discussion in the OECD on what is needed on that? Because there Europe is going to do it on its own.
Well, first, the OECD is very overwhelmed by the current discussion on Pillar 1 and Pillar 2, and once it's over, there is another inclusive framework which is about to start on carbon pricing, but which is developed also by the same team. Second, we are already active in this field externally. You know, I'm in charge of the list of non-cooperative tax jurisdictions. So the Commission prepares the work of the Code of Conduct. We already have requirement on third country for many years. Since 2017, we have obtained 140 changes of legislation in more than 60 countries outside of the EU. So the Code of Conduct has been a relatively powerful tool. But based on this experience, which I have developed now for the last 2 years and a half, where I have a lot of contact with those jurisdictions which are on the list, as you can imagine, the situation is quite viable. That is, there are probably a few that really want to misbehave, but the vast majority are small countries with weak administrative capability, law poorly drafted, and then you have smart guys that exploit the loopholes. We need to make it more difficult for the smart guy to exploit the loopholes. That's also a question of tax fairness, and that is what we intend to do.
I cannot leave unasked, though, one question about Pillar 1. I know it's not on the formal agenda, but as I understand, the Commission, under the calendar, July 27th is the date that the proposal on Pillar 1 is supposed to come. Yeah, you're shaking your head. I mean, so we can go on vacation that day, I guess, or?
Absolutely. This has already been taken out of the official work program of the Commission, because we cannot make a proposal before the underlying international agreement is finished, is there. It is not there for a number of reasons, but one is obviously the extreme complexity of the topic. So we all see how difficult it is to come to an agreement at 27. So imagine how easy it is to come at an agreement at 137. That is certainly challenging. It takes time. It is very complex. The political will is still there. The Commission will move as soon as the agreement is there, and the best evidence that we care for it is that we have also announced our intention last year to make it an own resource of the EU budget, something we would certainly not have said if we were not caring for Pillar 1 as much as we do for Pillar 2.
And so now it seems like the most likely time then would be, what, in the autumn, in October, or for a Commission proposal on Pillar 1, or?
The Commission proposal will follow swiftly the minute we have an agreement on Pillar 1. Now, there are many cooks for this agreement on Pillar 1, and we don't know yet when the recipe will be ready. As I said, the July Inclusive Framework meeting has been now postponed to October, and we don't know yet when the multilateral convention and the model rules will be ready, and we need both to be able to move from the international agreement to a piece of union law and to see what details need to be adjusted, how we can simplify the implementation, whether we need to introduce one-stop shop between EU member states, whether we need to, I don't know, amend the dispute resolution mechanisms directive and stuff like this. So all this, we have a collection of questions for which we don't have the answer because it's work in progress. So one step at a time.
Okay, great, thanks. I think now might be a good time to open the floor to, or to open the floor to questions. I see quite some hands up now. What we're going to do is, I'm going to give my microphone to this lady here, and she will pass it. So, and I'll moderate from here. So let's, yes, Alex.
Thank you very much. Very interesting panel discussion. Alexander Ivanovsky from CFE Tax Advisors Europe. So as some people in this room know, CFE has been active in this area with the promotion of a project on so-called ethical bar of what is appropriate professional judgment in tax advice. So I think just a question for the panel, we mentioned Pandora Papers and all these revelations in the public domain as an incentive to do more in this area of what we say, we introduce this term of the gray zone, because we all agree tax evasion or the black zone is something which is illegal and not acceptable within the European Union. But if you look at tax scandals like the Cum-Ex, we have 62 billion of euros of tax fraud, mostly in Germany, I think France and Belgium, which are all regulated for the purpose of tax advice, regulated tax professions. So don't we come back to this position of you know, even with perfect laws, you still need good professionals who exercise professional judgment. So I suppose the question is the Commission looking at this threshold of appropriate behavior or regulation of the profession, which is, as we know, very difficult, because tax is jurisdictional and legal culture differs significantly among European states. Thank you.
Yes. Benjamin.
Well, I've been very clear already that we do not intend to regulate the profession as such. So what you will have in the initiative, which is still being designed, so it can move between now and the moment it is on the table, will be more related to a behavioral principle and a set of clear elements that allow to distinguish between what is acceptable and what is not. We fully take it that the profession needs a clear guidance, that you should not have some kind of creative fog and wonder whether you're on the good side or the wrong side of the law. That is definitely not our intention, and we will have to work on to this effect. And the consultation will certainly play an important role. So we certainly invite all of you and your members to participate to this consultation once it is launched.
Thank you. Hi, Elodie Lamer with Tax Notes. I have two quick questions. First for Benjamin Angel. You said that it would be limited to third country. Could you explain why? Is it something linked to the freedom of movement in the EU? And then I was wondering, you know, my accountant, he tells me, oh, you should deduct your roof, you should deduct your frame. So is there some sort of right for taxpayer to have the least taxed route, and that would actually clash with the possible legislation? I don't know if my question is clear.
Well, I guess only the first question is for me. Maybe the second question is for you. The first question, we intend to look at the situation in third country because the text is conceived as a complement to the text which is already under discussion related to the misuse of shell companies and which is related to the European Union. We have a set of legislation that apply already within the European Union, as was recalled several times today. I don't know whether it is perfect or not, and DAC 6 is certainly not the clearest text ever. We were talking of the legislative process. I think it's Marcel Dassault who once said a camel is a horse constructed in common. DAC 6 is very much a camel, but it is what it is. And since UNSHEL focuses only on the EU, and we came with UNSHEL first for the reason indicated by Marcus, which is we need to clean our house first. And then we take the more high ground. But since we are optimistic that an agreement will be reached on UNSHEL, we plan an external ramification later so as to address similar issues in third countries. But you cannot address it via the same recipe, because by definition, union law apply directly to our member states. There are plenty of things we can do with union law. Union law does not apply to third country. Hence, the need to go rather at the root and look at those that help creating those structures in third country, whether they are located in the European Union or in third countries.
Okay. Philippe, did you want to answer?
Well, yeah, the second question, your accountant, he's really in danger, I would say, because if you look the actual situation, well, at least, for example, in my country, principally, it is allowed to pay the less tax as possible. Yeah? That is the constitution, the highest court. I assume that will more be a discussion also more and more in the European Court also in the future. The problem is to give good advice for me. And there your accountant should give you the total advice. For example, what is the best way to pay less taxes? But that's why I'm saying he should give you more than the technical element. He should also say, do you have substance? Is it form over substance? And those questions, so that you as taxpayer, for me, can take the right decision. Yeah? Because, and that I think in the past was less good, is that there was only the technical discussion which was given by the accountant of the tax advisor, but a good quality advice for the future, you have to ask more questions. Do you have the right substance? What will be the reaction of third parties outside the company and so on? So those questions now should also be brought on the table, so the taxpayer, but for me it's still the taxpayer who decides which structure to implement, but he should have all the elements that he can write and perhaps avoid the too abusive structures which in the past were sometimes chosen. And of course, that's a problem a little with also all the rules from the countries, but also from Europe, is that the intention like DAC 6 is a good intention, but then if you see the end legislation and how it's applied in the different countries, well, I don't know anybody in Europe who on its own can say what is in DAC 6 and what is not on the field. You have the high picture and the principles, but in a concrete case, it's sometimes very difficult and different between the different countries.
We'll go with the gentleman on the shirt there at the end of the, yeah, the glasses.
Stephen Gardner from Bloomberg Tax. To what extent is the planned rule on tax advisors an acknowledgement that DAC 6 is not working? Will it replace DAC 6? Is it sort of a recognition that DAC 6 is creating unworkable burdens? And a second question, which relates to a point raised by the gentleman from PwC, he talked about the definition of aggressive tax planning evolving. So I'd be very interested if you could say something in relation to that and technology, crypto assets, the blockchain, so on and so forth. Will what you come up with be future-proofed so that it can manage these difficulties? Thank you.
Well, first on DAC 6, DAC 6 is there, it starts being implemented, we start gaining experience. The philosophy, though, of DAC 6 is different. DAC 6 doesn't aim at creating those schemes, at preventing the creation of those schemes, it aims at forcing reporting on those schemes. Here, the idea is to go a step sooner and create rules which aim at preventing schemes leading to tax evasion or aggressive tax planning via structures in third countries. Let me insist again, we are not here talking of rules that apply within the EU. Second, DAC 6 has zero impact on third country advisors, by definition. And again, with modern technologies, you can go online and have structures at your disposal in any tax haven within a few minutes. We cannot completely ignore it. If we can pile up thorough and robust legislation in the European Union. You may say you hate it, or you may actually like it, because then you have to provide advice because your client is lost and absolutely needs you. But if we completely ignore the third country dimension, somehow what we do is doomed to fail. Because some have the capacity, the financial capacity, to go via those third country advisor directly. So we need to find a way to address it. Now on crypto specifically, which is a slightly different topic, there is a lot of work which is ongoing on crypto, including in the DAC, since there will be a DAC 8, which is coming up in the autumn, which will cover crypto, but not only. It will have a collection of small dishes alongside the main dish. And DAC 8 will be accompanied by a communication where the Commission will provide let's say, advice or policy assessment on how best to handle crypto assets from a taxation point of view. This is clearly an area where the experiences of member states are viable, and there is a collective need to have more discussion given the importance that the sector has taken in the last years.
Philippe, you want?
Perhaps one question, because in the regulation the Commission is looking at, you talk about third country.
It cannot be a regulation, unfortunately, because we can only have directive.
Directive,
but we're not allowed to have regulation.
Directive, you talk about advice intermediaries in third countries, but how will you enforce that to those third parties in third countries? Because is the tax advisor again in Europe, who perhaps has also day-to-day contact with that taxpayer, again taking all the responsibility?
We have identified this problem and we have found workable solution, but you will have to be a bit patient to see them.
And then it's us to water it down or to improve
or to make it more ambitious.
Or improve it, yeah. That's what I learned, yeah.
No more from anyone on that? No? Okay, then the lady there, yes.
I'm Andrea Arab from Hungary, from the Hungarian Tax Expert Association, and also from the ETAF board. The presentation was very interesting, and it shows that it's not decided yet how or what to do. But if you think about from the practitioner's point of view, that how many administrative burden is put on them, then maybe you should think also over that, what we could also see here from the FISC subcommittee president, that maybe we should select those practitioners who are really involved in such harmful or dubious practices, and maybe we could use the DAC 6 not because of the reporting part, but because of the list, the negative list that is used. Maybe that could be put together, a negative list of harmful tax avoidance schemes that could be detected, and already it could reduce the number of practitioners and the burden, the administrative burden that is already on them, because I think the main aim is to help also the taxpayers and to provide such services which helps them. And of course the government and the budget aim is to have as much money as they can deserve, but try to do in the least harmful for the practitioners as well. Thank you.
Whoever wants to
The notion of list of bad tax arrangements somehow exists in one country, and with which we are in discussion because they have more experience than we have. If I tell you it's a former member state, you might be able to guess which country I'm talking about. Interestingly, the United Kingdom has put in place a legislation which is called POTAS, Potential Tax Avoidance Scheme, so which covers tax avoidance, not only tax evasion. But one of the elements in their practice is also what you mentioned. That is, the Treasury publishes regularly tax arrangement which they considered, to use their own terminology, as defeated tax arrangement. And then people know that if they use such tax arrangements, somehow they're already breaching something which has been considered as damageable by the United Kingdom. That is an interesting idea. We are examining what exists a bit everywhere. Now, in terms of administrative burden, it is part of the profession of tax advisor to know what the tax impact is of what you're doing. Otherwise, you would not be doing it, I guess. So I would have difficulty to imagine that tax advisors could not be required to check that their advice is not leading to tax evasion, certainly, because today would already be breaching the law, or aggressive tax planning, if aggressive tax planning is very carefully defined, so that you can really implement the rule. Then it's a question of doing your job and knowing what is the consequence of your advice.
Philip, did you want to?
Yes, but well, first of all, for tax advisors, it's not always easy to know with all those legislation what's still possible and not.
But that's what you're paid for.
Well, but perhaps not enough, because it's so complex. It's so complex those
But we will
days.
not rule that out.
But another question I have: we always talk about tax abuse and so on, but do we still know how much there is still? Because perhaps in the past, before we had tax 6, there may have been a huge amount of aggressive tax planning. Are we still talking about enormous amount? I have no idea. I suppose the Commission knows if they want to go further in legislation, because are we still making more and more complex and enormous big part of legislation for smaller and smaller pieces? Like I say, I love skiing, and I hope I do the right thing in skiing, but I have no guarantee that I never will have an accident, except if I never ski anymore. So the best thing to have no aggressive tax planning is have no taxes.
Wow. Sarah, you want to add something here, I think, yeah.
Yeah, I just wanted to add that I have no doubt that the offshore industry is still doing well,
okay.
despite certain progress in the regulation.
Okay.
And I mean, we see, this is a good example. For example, we had the CRS implemented, which was a big step forward. Now we see that tax evaders, in this case, I would say, avoid or circumvent the CRS by having shell companies in tax havens. Okay, and then you have to, it's like this cat and mouse game, so then you have to make sure we get the beneficial ownership information of those shell companies and tax havens. And this is something Benjamin already mentioned. This is where I think the dichotomy or this distinction, which most of you seem to have very clearly in your mind, that the state and the tax advisors or the tax service profession is something completely distinct or different, and I think there are certain jurisdictions, like former or the crown dependencies of the UK, other ex-colonies, small island states, where I think this distinction doesn't make much sense actually, because they are captured states by the tax service profession, and if you go there, people will speak perfect Cambridge English, yeah, and then you see the certain responsibility also of the service professions, and this is also I think where a certain demand comes from, no, to regulate those professions, I think. And then you cannot say, I want the government of island state XY to solve problems of the global financial system that have been engineered by other people.
Other, Edwin, and yeah.
Yes, thank you. My name is Edwin Visser. I'm tax policy leader at PwC for the EMEA region, also a board member of the Association of Tax Advisors in the Netherlands. Maybe some observations, some questions. I think we have a common concern, the lack of trust in the profession. That should be restored, but I'm really hoping that, you know, the Commission also recognizes what's happening in the tax sector. That, you know, the Commission will not use a sledgehammer to crack a nut. Because when you look at this from a wider perspective, tax is becoming part of ESG, at least for larger companies. Responsible tax advice is also connected to ESG and responsible tax behavior too. When you look at companies and our advice, you know, we will not advise always the cheapest option. We will give the client all the options and give the client advice, not only technical advice, but also how some solutions will be perceived by stakeholders and by wider society. That's not only reputational risk. Can you explain it when it hits the Financial Times? That is really what is happening in the sector. Even in a non-regulated country, the Netherlands, we see, of course, the nudge of the government to come up with tax governance rules. So the Association of Tax Advisors developed and adopted tax principles, which are now part of the disciplinary framework of the association. And that those tax principles say, you know, when the tax advantage, the tax benefit is predominant in the structuring, in the planning, then our members should have a conversation with the client on those wider perspectives. And I think that's, I hope, that's a question to Benjamin, that is taken into account in the development of any, you know, directive that is coming up. And that we don't go on a path, you know, that's, I think, the fear of many tax advisors. We look at our colleagues accountants who have to go through many admin and red tape, you know, and have many obligations, and that all those voluntary developments are also taken into account. I'll stop here. Thank you.
Benjamin?
First, we are not in a situation where we mistrust tax advisor. On the contrary, we are well aware of the importance of your profession. And for this reason, we want to clarify the rule, because we think that given the role of tax advisor, you can play potentially a key role in making sure that we get rid of bad practices. But that requires first a clarification of the legal framework. Once the law is clear, we have absolutely no doubt that 99.99% of tax advisors will just abide the law. That's why the responsibility is on the side of the legislator to make sure that we come with the right rules. We will try also our best to make sure that the administrative burden is limited to the maximum possible extent. But again, it is at the very heart of the profession to try to assess what the tax consequences of your advice is. So I think there will be a legitimate expectation from the authority that you're able to explain what assessment you have provided and for what reason. This is what you're paid for, again. Huh? Yes.
Michael, I think.
Michael Schick from Bundessteuerberaterkammer, the German Federal Chamber of Tax Advisors. So could I please come back to the core subject of our conference, the role of professional regulation? So I would like to ask a question to the European Commission rather, even if it's DG Tax. So why is the idea not seriously pursued of introducing EU-wide a very strict and strong professional regulation for the profession, meaning high access barriers, high quality in the sense of what Philippe said, creating high quality and high trust, and above all, what Philippe said in his speech, reserved activities to a very highly specialized profession. And ensuring independence and high trust. This is maybe not 100% of the solution, but it contributes a lot. So my question is that the internal discussion with the market politicians and where the problem is? Thank you very much.
Well, I could answer that the main reason is that I would like to have an agreement before I retire. Having an agreement on the regulating the profession Europe-wide would be a decade of discussion at least. And if we want to have something which is maybe not that ambitious, but that works nevertheless, we have to park the idea of regulating the professions and have an approach which is rather turned around avoiding certain behaviors, whatever the legal status of the person providing legal advice. In some member states, it would be extremely difficult to regulate. In many member states, for instance, lawyers, to give you an example, are providing tax advice. Starting to change the status of a lawyer is not a discussion that you can easily open and close. Huh? So while I certainly agree with you that a regulation across the board on paper would be the best solution, in practice with the European Union as it is, I don't think it is something within reach, and therefore it is more advisable to look for what the economists would call second rank optimum. And
Marcus,
only a short addition, as we from the FISC subcommittee have asked for a study about I think in 5 member states how the procedures are, and to learn some best practices. Maybe then that can help a little bit.
Sure.
I hope we will get this study before the summer break. That is what was agreed in the tender. So I hope that helps a little bit to find a common ground and an objective or kind of objective approach to address these issues.
Johan, yeah.
Thanks very much. Johan Baras from Accountancy Europe. Just a quick question, quick remark first of all on the public consultation. So on behalf of myself and my members and the members of ETAF and all the others, please let us have a summer holiday, and could we plead for a full 3-month consultation period that lasts until end of September or early October? That would be very, very much appreciated.
I can't imagine a better topic on the beach than this one.
Yeah, but with the drinks, I don't think the discussion will be as good quality. Then just on the legal base, so you mentioned, Benjamin, that there are indeed several options, possibilities that you're reflecting on that we will see, of course. But I was just curious if you're able to already maybe elaborate or give some examples on what options you are thinking about, especially the options that would maybe allow Markus and his colleagues to have a touch on the proposal as well. And then finally, at the April hearing in FISC, your colleague Jasna Voye, she didn't mention that this would be only focusing on the third countries. So just curious, what happened in between this April hearing and now? Thank you.
FISC hearing. It was a FISC hearing.
I'm afraid I will have to reiterate that you will have to be patient and wait for the proposal to be made. We have to do things in the right order when we launch a consultation with an earnest. So if I were to tell you that each and every detail is fixed and we launch a consultation, what kind of consultation would it be?
And the holiday?
And the holiday, well, the questions related to the duration of the public consultation is subject to internal commission procedures. So we have rules and we will respect our rules.
Are there any other questions?
There are the tricks behind the rules.
Last call for questions, I think, if Elodie, well, yeah.
Sorry. In the blacklist, the EU listing process, there is a criteria that is being negotiated, which is the beneficial ownership. Wouldn't that be the external aspect of this Unshell directive? Thank you.
No, it's not sufficient, but it has indeed an important interrelation with the topic. The work on beneficial ownership has just started. So we are not advanced in the code of conduct, and the Commission will make more extensive proposal to member state in the autumn on how to approach it. It is complicated because this concept has a dual dimension. It has a money laundering dimension, as you know, and fundamentally the requirement related to beneficial ownership as far as EU law is concerned are to be found in the AML directive, not in a tax text. But it has also an obvious tax dimension. So we have internationally work which is being carried out on beneficial ownership in the Financial Action Task Force, but also by the Global Forum. And whatever we do somehow has to reconcile those two dimensions, avoid any contradiction, and make sure that we can progress on this way. The OECD discussion on beneficial ownership are also a little bit complex because while the Europeans are very supportive of further international progress which would allow participating countries to exchange effectively information related to beneficial ownership, the enthusiasm is not entirely widely spread among all participants, and some are a little bit more reluctant. So it is an area where the European Union has high expectation, but those high expectations are difficult to enforce across the board in all jurisdictions in the planet. This is where the code of conduct and the list becomes really handy, because this is an area where we can nudge good behavior, where we can really say, once we have this criterion and once member state has agreed on it, third country, please do A, B, C, commit if your legislation is not ready, and if you refuse to commit or do not deliver, then we will draw our consequences and you run the risk of being on our blacklist. So we can help having a lot of international progress in this field. You're absolutely right that beneficial ownership is probably one of the key elements that we need to avoid the misuse of tax structures in third country. But it will take time for us to get there internationally. And meanwhile, there are a number of things that can be done. But I'm sure the EU Tax Observatory is also trying to assess the usefulness of beneficial ownership and further progress in this field.
Say more on that if you want.
Yeah, I mean, it's impressive how little we know about offshore wealth at the moment, and we hope that bringing together all the information from the different beneficial ownership registries and matching them to BIS data and etc. will allow us to get a better picture of who owns wealth where, because currently even our national statistics don't show the proper ownership of assets, yeah, because they basically show assets owned by in a tax havens, or at some tax haven assets owned by a shell company located in a tax haven belonging to someone located in another tax haven. And yeah, so we are looking forward to more transparency in the ownership of assets. Yes.
But don't expect progress overnight. So that's a key message. Not because that we don't want it, we want it, but to reach the same level that we have for taxation, for instance, where you have an automatic exchange of information now with a huge number of countries across the world in the area of beneficial ownership, will take a lot of time to be agreed on internationally.
I think with that, we'll close the floor for questions, and I'll invite Philippe up to have some closing remarks.
Let me thank the speakers for their insightful contributions. So let's have an applause for all of them. Thank you very much. It was excellent. We understand that it's in progress work, and that's a lot to do and a lot of things to do, and all of us in the room and all the the stakeholders are much interested, but we can understand that there is a lot of attention on this project. So Benjamin, you have a lot of pressure on you, and you can understand that everyone is interested in going on, and we are interested in this consultation. We heard that it will be launched in July. So I support the demand of having some time during holidays period for the responses. But well, we expect that, and we've got a good overview of what the Commission intends to present on this regulation, and the first reaction of the stakeholders could confirm this expectation. So this debate will continue for sure, and it will probably be one of the main topics for the months to come. I insist on the need of clear wording on the regulation, and otherwise it's an open door to uncertainty and well, to all what we know already. So let's work together on that. Benjamin, well, we all know that the Commission has the initiative power, and that is in your hand. But don't forget that professionals, even when they sell services on the market, are committed to the public interest. And we are partner to public authorities, at least when the professionals are members of regulated institutes, what is the case of people here in the room. So we offer our services for your draft, for your project, and we are in favor of contributing to such a regulation. So we have our responsibility, and we probably have a role to play, and we hope that everybody was convinced a bit of this role of professionals in regulating the activity. So thank you everybody for the ones who contributed by their questions. It was very much interesting, very good questions. We understand that you all know very well the topic, and you know what is on the table. So thank you for participating to this conference today, and we'll be delighted to see you again and to work together hand in hand in issuing this topic. So with that, I conclude on this conference, and it is my pleasure to invite you to have a glass for sharing our views and for concluding in a good condition this conference. Thank you very much.